Welcome back to Be Rich. It's good to be here after some time. Vinod is away in Bangalore, so me and Sashwath thought we would do a podcast together. So I wanted to do this podcast because news on Japan came up. But before we go to Japan, let's look at what is happening in the market today. As I record, the Nifty is up 42 points. The Bank Nifty is up 270 points. Gold is up mildly at 6,700 rupees for a 22 carat gold per gram. Yesterday was a very rare day in the markets where the Bank Nifty and the Nifty went in opposite directions. Bank Nifty did exceedingly well. If we had gone long on the Bank Nifty, we would have made money, and the Nifty went in the opposite direction. Never happens. Very rare. And today the market opened. It opened in the negative, was in the negative for quite a bit of time, and then has gone up. It's may primarily gone up due to the fact that the Bank Nifty has gone up. All our stocks are doing extremely well. NATCO is up. Karnataka Bank is up 4%. Tangamail is up 4%. Tamil Nadu Mercantile Bank, which was struggling, is also up today. And so is Stockcraft. And today, why did I do this podcast? Because I wanted to talk about Japan. I saw a news report which says that Japanese exports are surging and they have gone up 13.5% compared to last year for the month of May. And this is the fastest growing growth in Japanese exports since October of 2022 and 22, October of 22. For 6 months in a row, Japanese are enjoying positive growth. All this is primarily due to the simple fact that the yen has weakened. Something that Buffett got about 18 months back, something I picked on something like 12, 13 months back. Ever since that, Shashwath and I have been looking at Japanese stocks and we have been talking about Japanese stocks. And so I'll allow Shashwath to explain what has happened, and then I will add my two bit, and then we will wrap up on what happened in the market today.
Yeah. So the Japanese, as all of you know on this channel, have been struggling with deflation that is teetering on the edge of deflation for a long time. This has been since their bubble burst in the late 80s, early 90s, after which the Japanese consumer has remained forever depressed in the sense that they haven't been spending as much as they would be. So they've been hoarding their cash, and the economy has had and has remained largely stagnant for a long period. So, given this is not ideal for any policymaker, and the Bank of Japan as well as the Japanese government have been trying and fighting tooth and nail to get their economy revived and to get it on a positive growth trajectory. However, the Japanese consumers have remained resistant to this idea, and the Bank of Japan, the Japanese central bank, even tried to experiment with negative interest rates to push consumers to borrow and spend. And this is what led to Warren Buffett swinging in Japan, because he figured that, look, there's an opportunity where I'm being paid to borrow. That is, I'm being given a certain amount of money to borrow and buy their companies. And their companies which are usually debt free, which are fiscally prudent. And these companies are big trading houses which have existed for the past 100 years or more and are probably going to exist for another 100 or 200 years. These are the kind of solid companies which Warren Buffett had jumped into. And given this information, we also decided to look at Japan and follow our investing guru in his investment journey. What has happened as of late is that the Bank of Japan saw signs of inflation after a long time, and they were extremely optimistic about it, and they decided to keep interest rates persistently low. What this has meant is that their yen had depreciated by over 20%, and what ended up happening was their exports soared by 13.5% in April. So their exports soared, because the yen depreciated, making their exports cheaper in the global market, making it more competitive. But this also meant on the flip side that their imports became more costly. And Japan is now facing cost push inflation. There are two types of inflation: demand pull inflation and cost push inflation. Demand pull inflation is when you get growth from a bullish economy which is moving forward on a positive growth trajectory. Everyone is optimistic, and the animal spirits, as John Maynard Keynes said, are riding high. Cost push inflation is something of a different kind of inflation, where cost push inflation is mostly due to supply constraints or other factors which lead to the price of a commodity to rise without the demand for that commodity rising. This is cost push inflation. Regulators, when they're looking for inflation, are usually looking for demand pull inflation, because this is usually the kind of inflation which is easier to manage and control and remains in the ambit of regulators and policymakers, whereas cost push inflation ends up being something which regulators seldom can control. However, this gives Japanese regulators the chance to raise their interest rates from negative numbers. And some of you may be wondering that from what I've just described, where cost push inflation, where the price rises with no gains being made in terms of increase in aggregate demand, doesn't sound so desirable. But one thing you have to understand is that any sort of inflation in an economy which is deflationary is a good sign. Because what this basically means is that today, if there's inflation, people are optimistic in the sense that people know that the price is going to rise tomorrow because inflationary expectations have been set in the economy. And because they're expecting the price to rise tomorrow, they're going to purchase today. And what does a large number of people thinking this and purchasing today mean for the economy? This basically means that people are buying, which means that aggregate demand is going to rise. If aggregate demand rises, you basically see an economy starting to grow again. And this cost push inflation may have just breathed a new life into the Japanese economy. So that's what I have to say about
Yeah,
this.
this means that the UNIDA will be able to raise rates further. And why has the yen declined so much? This is because the dollar is at 5.5% interest rate and the Japanese yen is at 0.1. The depreciation is not because of any economic weakness, it's basically the two countries are moving in different economic directions. So the moment the UNIDA starts to raise rates to control inflation, the yen will strengthen. The strengthening of the yen will cut trade deficit and will also ensure that the gap between the dollar and yen will narrow as the interest rate gaps will narrow. This is likely to play out in the next 18 to 24 months as America tries to pipe down inflation and the Japanese increase the interest rate. So we were at the right time, we went long on Japan. If you want more ideas on Japan, Japanese, US, and other markets, you can always use the link below. My team, especially Trader Vinod, will be in touch with you.
One point I'd like to add on is that because the gap is now narrowing, this means that your stocks, even if they don't do anything exemplary, they'll end up appreciating in value just because the yen is appreciating in value and you are investing in a company that makes money in yen. I think this is the reasoning behind why he's saying that we made a good move on trying to move into Japan.
Yes, and once we have done Japan, we got it right. And most of our companies which we have bought are global companies where the Japanese market is not very important. Something like Toyota, which is global in nature. Having said this, there's another thing that has come up is Nvidia has gone through the roof. While everybody is watching Nvidia, an opportunity missed because it was very difficult to predict.
Almost impossible
To predict that Nvidia would go there.
unless you were an insider.
Yeah. But what is really giving us an opportunity is TSMC is giving an opportunity because it is in the island of Taiwan. And Taiwan is, as the new president of Taiwan says, is a silicon island. And TSMC is still suppressed at a lower rate and not yet reached $1 trillion valuation because of the global risk of China war, Sino-American pressure.
Yeah.
But TSMC has started to invest outside Taiwan and started to build factories everywhere else. And I do not think China will attack Taiwan because that will lead to a full-fledged war. So there'll be a lot of tension, and the TSMC at this level is a decent stock to accumulate. And Buffett bought TSMC and got out. He got out because he's a large corporate and he had a large position and he was worried about the China risk. We are taking small positions, and the fact that Biden is subsidizing TSMC to come to America makes that over the next 2 years, TSMC will do well. You can reach out to our team so that you can get better ideas. On the India side, Venkat Raman, who is the chief of Titan, was in Chennai yesterday and he opened a Tanishq store and he opened a Tanera store. What he said in effect is that Tanish has done great and will continue to do well. But we are looking at other markets, and so he is going to combine with Height Design and other luxury brands by creating a new brand called Earth Bhumi, which will sell ladies' handbags exclusively. And he is saying Tanera, we have only limited showrooms. Chennai has 4. He opened once in a shopping district in Pondi Bazaar yesterday, and he says Taneira is the future. So there are growth levers in Titan. It's not only Tanishq. Sari business is a big business. The handbag business is a fashion business. So there is, and at every dip, you try to get some Titan in because yesterday Titan fell, today's Titan went up. And from the last time when we said this, Titan has gone up 500 rupees. The other thing which I wanted to talk about, which will be of interest to you, is there was a brand called Freelander by
Jaguar Land
Jaguar
Rover.
Land Rover, which was an iconic brand, which they discontinued in 2015. Now, what they have done is they have gone to China, tied up with a big manufacturer, Chery, and going to launch an electric Freelander,
Mhm.
which will be exclusively sold in China. And once they meet the Chinese demand, they are going to export more. So, this is what has happened is they will be leveraging Chery's manufacturing and production facilities. Using they license the brand to this new joint venture, manufacture and start selling. So there's another lever. And as we know that they have committed by the end of this year, JLR will be debt free.
Mhm.
So the stock is trading extremely cheap, and you can consider this at this level. So that's it. So we basically wanted to talk about
Global markets.
global markets and give you some tidbits on what's happening in India. I hope you like this, and thank you for watching Be Rich.
Thank you.
If you like the presentation, press the like button of this video, subscribe to our channel, and turn on the bell notification. If you send this video to your friends and relatives and have them take a look, I'll be obliged. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.